How can an investor create a crypto portfolio that has a relatively lower risk while still providing massive 10x returns? That's the goal of today's video. We're going to show how to create a diversified crypto portfolio.
You need to diversify your bonds
While still getting massive returns. So we'll show what percentage of Bitcoin to buy, what altcoins, and what percentages to buy to round out a great crypto portfolio. After watching this video, a beginner would have made a high-risk portfolio that would have been more exposed than a streaker at a soccer game. Can now put together a crypto portfolio that will look like a professionally crafted, perfectly diversified, relatively low-risk portfolio that Warren Buffett would be proud of. That is, if he liked crypto. The recommendations in this video are perfect for beginners who are just getting into crypto and don't want to drain their account. Although there will be one or two coins in this portfolio that can be considered high-risk coins, the vast majority are safer coins. This portfolio puts together coin investments that are highly likely to survive a bear market. And, as always, some risk with investing in the crypto market due to its volatile and unpredictable nature, but these coins have the best long-term chance and upside potential to make a profit. Before we get into it, do make sure to smash the subscribe button, as that helps us with the YouTube algorithm. Now, let's get into what makes up this diversified crypto portfolio. Essentially, a well-balanced portfolio is split into four types of assets: the foundation, the most utilized, the passive income, and the market hedge. Let's look at the different types of coins you should have in your cryptocurrency portfolio to manage risks better. 1. The foundation asset. Bitcoin is the first coin we're going to invest in, and I'll tell you why, and just how much we're going to be investing in Bitcoin. Stability is the main reason we're going to be investing in Bitcoin. You will probably laugh at the idea of Bitcoin being stable if you're not in the crypto world. Still, Bitcoin is relatively stable in terms of cryptocurrencies, and it's also one coin that is most likely to be around for a very long time, while still having upside potential. Bitcoin's prevailing status as the founding father of all cryptocurrencies will never change. Cryptocurrencies wouldn't have existed if it wasn't for Bitcoin. The creation of Bitcoin and its blockchain kickstarted a diverse industry of tokens and coins that solves real-world issues by leveraging this revolutionary technology. Bitcoin is the most significant cryptocurrency based on market capitalization. It would be fitting to say that the cryptocurrency market is highly related to the price movements of Bitcoin. Bitcoin has the most significant brand awareness as the most widely recognized cryptocurrency. As the default base currency in the cryptocurrency world, one would first purchase Bitcoin to effortlessly buy any other token or altcoins. Local crypto exchanges usually limit the number of coin traders can buy with fiat money. Bitcoin has seen mainstream adoption, as most countries have adopted the coin as a legal tender. Bitcoin's future is bright. You can balance your investments by holding some percentage of Bitcoin. Bitcoin will almost always initiate an uptrend or downtrend. Bitcoin is important to have as part of your portfolio. You should have about 35% of your portfolio in Bitcoin. 2. Most utilized asset. Ethereum as the next coin comes as no surprise.
Fair enough. Yeah, fair enough.
As it's one of the most utilized coins in circulation and the second largest cryptocurrency by market capitalization. Ethereum is the coin with the most utility, and Ethereum is the most actively developed blockchain in the industry. The Ethereum blockchain has the most applications built on it, with the most developer and worldwide usage at the moment. Ethereum is as safe, if not safer, than Bitcoin, and we think it even has more upside potential with more room to grow from a utility perspective. In contrast, Bitcoin will most likely just primarily remain as a store of value. Developers solidified Ethereum's position as the most credible blockchain platform, as over 85% of the tokens exist on the Ethereum blockchain. Ethereum holds fort in terms of credibility and development, although Waves or Neo are notable blockchain competitors. Ethereum is used alongside Bitcoin as a base currency, as it's much faster than Bitcoin. Ethereum's utility also correlates to its price. The more projects built on Ethereum, the higher the demand for Ether coins, leading to a price increase. Having a portion of your investments in credible and established coins, such as Ethereum, is essential in stabilizing your portfolio. About 15% of your portfolio should contain Ethereum. So these are the pretty obvious calls. We now have about 50% of our portfolio in Bitcoin and Ethereum, and we believe these coins are safe plays and should still be here in about 12 months or so. And if they're not, well then, I wouldn't worry too much about the rest of the coins, as they're likely to be destroyed as well. 3. The passive income asset. Passive income tokens and coins help investors earn passively. You will earn rewards in free coins by just holding on to your current coins. Apart from the inherent value of these coins and tokens, you'll need to conduct regular distributions, either monthly, quarterly, or biannually. Passive income coins are also known as interest-bearing coins. Some examples worth looking at are Polkadot, Polygon, Stellar, and Solana. Take Solana for example. We like Solana because, aside from Binance, it's the cryptocurrency that probably has the best chance at taking on Ethereum head-to-head. Solana is perhaps the next best thing after Ethereum, and in real-world usage, it works a lot better than Ethereum, although it does have some question marks over its decentralization. Solana is one of the coins that competes with Ethereum. Free coins are another example of passive coins that you can get through hard forks and airdrops. Hard forks represent duplicated coins issued by a coin that wants to move away or deviate from an existing coin. Bitcoin Cash, or BCH for short, separating from the leading Bitcoin, or BTC for short, chain due to differences in ideology, is an example of hard forks. In this case, any holder of the original Bitcoin will automatically get an equivalent of Bitcoin Cash for free. On the other hand, airdrops are a way projects market themselves by giving out free coins. An example of airdrops is when a crypto project issues its native coins to holders of Ether. You'll be rewarded regularly for keeping faith with the brand by holding a good portion of its passive income earner token. A passive earning income token is a must-have for a keen investor, as you will want to be in a position of having a mix of risks in your portfolio ranging from low to high. About 25% of your portfolio should contain passive earning tokens. 4. Market hedge asset. Price upheavals are notorious in the crypto market, and it's only fitting to mitigate or hedge your risks. The likes of Binance USD, BUSD for short, USD Coin, USDC for short, and Tether, USDT for short, are known as stablecoins that act like a market hedge, as they're tied to fiat currencies like the pound or US dollar and shielded from the crazy price swings affecting the crypto market. Protecting your portfolio from volatility and providing you with some much needed liquidity or cash whenever you need some by investing in stablecoins is an excellent choice. Imagine if you invest all your money into cryptocurrencies and that market takes a deep dive and crashes. You would lose a significant piece of your investments just like that. It is therefore essential to always keep a portion of your portfolio in stablecoins so you can buy more cryptocurrencies when prices take a deep dive or cash out as needed. You will prevent massive losses in your portfolio by merely following this action plan. You can keep about 25% of your portfolio as stablecoins. Having a well-diversified portfolio goes a long way in ensuring you're a successful investor, especially in the volatile and ever-revolving crypto market. With over 2,000 tokens and coins in the cryptocurrency market, each with its characteristics and varying degrees of risks for investors to choose from, having a balanced portfolio with all 4 categories of coins to choose from will save you, as a beginner investor, from losing all your investing capital. Here's our take on the least risky crypto portfolio any new investor entering the cryptocurrency world should have. This portfolio strategy is ideal for long-term investment as much as it is for a beginner. The currencies chosen have solid fundamentals and are most likely to grow long-term. And if you enjoyed this video and you want to avoid 10 common crypto investing mistakes, then click on this video here. See you there.